Hello and welcome everyone. Thanks a lot for joining us on this month's live stream. We have a very interesting update here for you. We'll be wrapping up what happened in December with our Wright PMS, and most importantly, we'll be talking a lot about our outlook in 2025. So many of our investors reach out to our sales staff, their relationship managers, trying to understand what's going to happen in 2025. Is this the right time for them to invest? And which sectors might work well, and what different scenarios in the macroeconomic sense could come and impact the market. So this is what I'll be covering in this particular session. I'll start by a quick presentation and then we'll go over to a Q&A. So I hope, and please do keep on putting your questions in the comment section below. Let us know any queries that you might have about the PMS, about any of our strategies, and we'll be very very happy to answer those. So let me start off by this quick presentation. All right. So, so we'll start off by a quick overview of the December 2024. What happened? See, December 2024 was very eventful. We expected that the market was recovering from November, right? In November, we saw some big corrections, and December was the time when we were seeing some recovery. But towards the end of the month, we all expected Santa Claus rally. I actually went ahead and I actually talked to my investors and said that if you want to top up, might be a good time for you to top up, because we expect a recovery in December. But this there was no significant rally. We are seeing some recovery happen in early January, and we do expect some short term recovery. But will this be a quick rebound from November levels? That is the big question. So before we go there, before we talk about the market outlook, let me talk about what happened with the PMS in the month of December, right? So firstly, in our PMS we have three schemes that you're all aware of. Our factor scheme, this is a multi-factor approach to investing. All of them have completed now 16 and a half months, close to 17 months. And our since inception CAGR with our factor scheme is 52.2%. Aggregate returns are, absolute returns are close to 80%. We have outperformed the benchmark by 30% on CAGR levels, and absolute levels more than 45%. Then we have our momentum fund, which while the numbers on the CAGR level look lower, right, and outperformance level looks lower, but in the last 1 year, the right momentum fund in fact has done incredibly well, right? So it has made a quick recovery, and for those people who like momentum more than the multi-factor approach, you have a diversified momentum fund where you can invest into. And then we have our alpha strategy, which is a high risk momentum strategy. So it has only 10 stocks. It is a concentrated momentum strategy where you will see the flavor of high risk and high returns. In certain markets this strategy does incredibly well. In another market, it might have slightly higher risk as well, right? So that is about our three schemes. Now let's go over to what happened in terms of performance between these three schemes. So as for our factor fund, we saw that we closed December with a very good performance. So what you would see in that, there's been a constant outperformance that has been happening since the correction started, right? So from October to December, in fact, if you see, our strategies have built in more than 6-7% of outperformance over the market. So December was also the same. BSE 500 ended up negative, whereas our strategies did close to 2.5% in terms of returns, right? So December was a good month, even though you can see from the price movement here there was a lot of volatility. So from November to December there was a quick recovery. Then later December we saw some correction, and we expected a sharper recovery, but we did see some recovery. And January is obviously, there's been only a few days, but we're seeing good movement, right? So all in all, a good month for our factor fund. And I think the stock selection that we have right now is sitting pretty tightly into the market, right? The type of sectors that we have selected, the type of stocks, right? So in this market where you're seeing a lot of drawdowns, picking those winners which are still showing strong growth, which still have strong prospects, is the art. Right? This is what you have to do in this current market, and our strategy seems to have pivoted to the right set of factors. Now, our momentum fund, again, it has had a good month. Even you can see a similar sort of pattern compared to our factor fund, even though these the stock composition is very, very different for these two schemes. You will see momentum strategy also has ended up December with more than 2% returns, done pretty well. And, from October to December has built in a strong outperformance, right? Now, on the other hand, our alpha scheme saw some correction in December. You can see that it has done better than the benchmark, but in November was slightly bad for this particular scheme. So therefore, you will see that while it has done better than the market for sure since October, the performance has been lower than some of our other schemes. Now, why has this happened? See, there are particular stocks that have caused such correction. For example, some chemical stock that went to through a deeper correction led to some underperformance for this particular strategy. But this is one of our stronger strategies, and we expect it to recover with a strong pace. So every time alpha goes through a drawdown, we expect it to come back with a more sharper returns, right? So we do have a lot of confidence going on in our alpha strategy also. Now let's talk about on aggregate level what happened. So all our three strategies, are doing pretty strong. What you will notice is that we've changed our branding on the PMS a little bit. So till last month you saw a black and gold, but now we have pivoted the branding. Even on our website, if you go and look at it, to a premium version of our current color scheme, with a black sort of a theme, but with the same right brand colors. So you will see that our three strategies have ended December really strong. Factor and momentum have done pretty well. Alpha has also done better than the market. And I think, the outperformance since the correction started in October, which is a good 7-8% for our strategies, shows that the sector selection that is going on in our schemes is pretty strong, and the factor selection that is going on in our scheme is pretty strong. So that was a quick overview of what happened in the last month. Now let's go and talk about our asset allocation in these schemes, right? So factor strategy, you will see a lot of tilt towards finance and capital markets. So you'll see finance, you'll see depository service, which are linked to the capital markets. You'll see fintech. All of them are a significant allocation. You see ETF. This includes gold and little bit of cash sitting in ETFs, or cash. And then you have some you do have some cyclical exposure also. So recently we've actually added stocks in the construction and industrial segments. On the other hand, we do have a little bit of consumer food, pharma, cement, which are all defensive stocks, but we have added steel, construction, and those type of products as well. You see consumer durables, IT, plastics, all of them also have some allocation in this particular strategy. The tilt, is still towards small and mid caps, but what you have to understand is that the small and mid caps that we have are the large stocks. You will see mostly 10,000 crore plus market caps, or 20,000 crores plus market cap, and there is no very tiny stock that can be very high risk. In a momentum fund, you'll see a different allocation. It does have finance and depository service and all that, but it also has telecommunication, it has consumer durables, and it also has pharmaceutical as the major allocation, right? So a different sort of allocation in this strategy, and again, tilt towards mid and small caps, but these are very, very large stocks. Finally, you have our alpha strategy. You will see again, this one has a similar composition compared to our momentum strategy: pharmaceuticals, consumer durables, consumer food, fintech, finance, etc. Right, and it has a slightly high allocation to mid caps, but these are again large stocks that we have invested into. So what you will see is that our allocation is towards the themes that are working right now, which is in the durable space, which is in the defensive space, and with a little bit of selection even in the cyclical space, with that recovery happening. Now let's talk about the important part, which is the outlook, which is where a lot of questions come from, our investors and people who are looking to invest, right? They want to know what is your outlook. Should it is this the right time for me to invest, right? Many people will come and ask us that 2025 looks interesting, but we've seen a major market in the last year, but is this the right time to invest? So we'll go over that, and I have a lot of charts to show in this presentation, and I'll credit where I picked these charts. What I really love is after starting the PMS, so many interesting research that I get from brokers. That is what I really appreciate. Many of those broker research is what I use for my presentations. And if a broker is watching, they have interesting research to offer, please do send it across to us, and we'll be very happy to collaborate with you. So we'll start off by talking about the market sentiment and the growth expectation, right? So, what we have to understand is 2024, while on aggregate level, we talked about in our wrap video that we have done 40%, it's been an excellent year. We talk about, Nifty doing 15% and all that. But this, this year was a year of two different halves. The first half of this year was full of, you know, good returns for all sectors. So from your real estate to PSUs to auto to capital goods, everything did well. But in the later half of the year, you would see that there was a big tilt that happened. Uh, Only the defensives like IT, pharma, durables, insurance were doing well. FMCG did a little better, but your cyclicals like metals, PSUs, autos, NBFCs, and all went through major corrections, right? So, uh, so it was a flip that happened in the year of 2024. And what we have to realize is that the market has seen a significant shift, even though on the overarchingly level, it looks good, right? Uh, so this shift is very important for us to understand as we go over to 2025. So possibly the trend that happened in the last half of 2024 will continue in the early part of 2025, and that is what we have to understand. What we saw in 2023, for example, was that profits were doing really strong, even though your top line or the revenues were slowing down, and that is because there was a lot of optimization that companies were doing on the margin front. Right? They were optimizing uh, their costs, they were optimizing their top line so that they were sort of maintaining very good margins, and that was leading to strong profitability growth. But what happened in 2024 was that those margin levels sort of reached a peak, right? So there was not a lot of scope to optimize more on the margins, and top lines were not growing. So your profit growth also narrowed down a little bit. And in the first, I think in the first couple of quarters of 2025, I think this is what many of us expect to see, that we might not see some exuberant top line growth or exuberant profitability growth. We might still see these narrow levels, right? Until unless we see some big surprises can also happen. But this is a trend that people sort of expect, that there's a trend of slowdown on the profitability and the top line growth until unless something significant changes or some great macro cues come and happen, right? Similarly, another big worry that we are starting 2025 is a slowdown in urban spending. What you will see if you look at uh, net savings versus net liabilities and net assets in this particular chart, you would see that households are now dipping into their assets for consumption, right? So while we were seeing increasingly trend of more and more asset building in the last few years, we are seeing right now consumption is slowing down and households are dipping into their assets to spend on consumption, and that is where there is a little bit of a worry that is forming in the urban side. But on the other hand, there are a few positive signs as well. So for example, one positive or a big expectation that is building into the market right now is that the capex might start. You have seen in the later part of 2024, after the elections, the government has really focused on consolidation, fiscal consolidation. They don't want to have a lot of deficit because the global macro scenario is becoming a little bit of a worry, right? So now the government wants to focus on uh, deficits, and that is where the capex spending or the capital expenditure, where the government was spending a lot on roads, railways, a lot of tenders were going out on different industrial products, they have slowed down, right? And the capex number is pretty low for FY25 compared to the other years. Therefore, we actually expect that the government might spend more in the next 3 months, right? We are hearing a lot of industry noises where people say that the capex is going to start, capex is going to start. If that starts, you would see strong trends form in the capex linked sectors. And we are actually seeing some movement if you track the defense ETFs, or if you track the construction indices, you were seeing that some trends are actually forming and some uptick is in fact being seen in terms of expectations for sure. I think other big cues or big tailwinds for the market is that inflation is stabilizing. I think in the month of October, we got a little bit worried because food inflation spiked up, and inflation was at a high. But November we've seen a cool down on inflation, and if you listen to the RBI governor talk, he expects the inflation to taper down in the year 2025. Similarly, crude prices, if you look at it, are pretty favorable. Commodity prices are favorable, so there's no pressure that is forming right now from the commodity side. So there are positive tailwinds also which will favor our markets when let's say the rate cuts happen, and that sort of leads to higher growth, right? So there are these positive triggers as well in the market, and I think February is a month where you will see a lot of interesting things happen when this announcement of strong, this one will happen, announcement of rate cuts will happen, budget will come, where the government typically announces a different schemes or different spending budgets that lead to triggers in the market. So there are tailwinds that are there for the economy as well. Like you said, there's an expectation of capex. You will see that the budget for FY25 was very high, but the spending, in fact, has been very low. States have also spent very low, and typical spending has been happening in the welfare schemes instead of the capex, right? So we expect there is an expectation of capex happening in the early part of the year, even though you're not very sure. Many people, in fact, have expectation of tax cuts coming to the middle class, and more welfare coming. So that is a little bit tough for us to speculate. Now, another big thing that we have to watch in 2025, obviously, is the global concern in the geopolitical developments, right? Uh, See, this is CYTD returns. What that means is from April to now returns. And if you look at it, this is a very different picture, right? So Nifty is an underperformer in the CY 2025. In the last 3 months, Nifty is again a underperformer, right? You will see in the last 3 months in the CYTD, what has worked is Nasdaq, Dow Jones, and Shanghai. And all emerging markets like India, Brazil, Korea, etc., have seen negative returns, in fact. And what we are seeing is a whole all money flowing into the US with expectation of President Trump's America First policies and all that, right? Uh, China, which has announced a lot of stimulus, has also seen a positive sort of a trend, even though that has sort of fizzled out towards the end. But we expect more such policies coming out of China, maybe rate cuts and all that, right? So global markets are presenting a very different picture from last year. So we did live streams a year ago also, and if you go and look at it, what we were talking about is that India, in fact, is the better performer. India is beating everything else, right? India is doing better than every other market. But that has drastically changed this year, where India is an underperformer compared to the US and China, at least in this calendar year. And yeah, talking about geopolitics, the biggest thing that is going to happen from tomorrow till 20th is everybody speculating what happens after Donald Trump comes in. Tomorrow, Donald Trump is going to get inaugurated, right? He will come out and he will sort of take his oath tomorrow. And from 20th, we'll see the policies coming out from Donald Trump. The big things that we see Donald Trump changing, and they are quite a few, and these are the ones that will actually impact the markets a lot. See, unfortunately, in the recent times, government policies, fiscal policies is what actually moves the market, and the policy of the biggest country in the world, which is United States, will actually come and impact the markets also. Some of the key policies that we can speculate right now that Donald Trump would change is firstly tax. Donald Trump's government is backed by so many huge billionaires, Elon Musk and Jeff Bezos and all of these guys. And I think what the corporates of the world expect of the US expect from Donald Trump is tax cuts for the ultra rich, and that is what might have been planned and might come out soon as Donald Trump comes and becomes the president. If that happens, that will lead to, again, maybe positive for the US economy, especially the large organizations. You will see the tech companies will see some price up moves, right? Secondly, and the big thing that will happen is on the trade front. Now, Donald Trump has talked a lot about trade. He said he's talked about Canada, he's talked about Mexico, he's talked about India, even where he says that India puts a lot of tariffs on imports from the US, but there are no tariffs of exports coming from India, and he might act there. Similarly, so there's a lot of speculation going on, and you never know what they come and do on the trade front. So this will be big thing to watch, and we will have to again, for 4 years we have not worried a lot about Donald Trump tweets, but maybe again Donald Trump's social media will start moving the markets, right? Now, the third thing that you could see change is immigration. We've already seen a lot of noise happen about the Department of Government Efficiency led by Elon Musk and Vivek Ramaswamy, where they've talked about only allowing high skilled immigration, and there's a lot of noise that have been seen about the immigration patterns from the H-1B visa, where a lot of Indians actually go into the US. um, and anything that is being announced on the immigration fund could impact Indian IT sectors, which does have a dependence of a lot of Indian workers going to foreign countries and working on those projects. So that will be a big thing. I think another big thing that will happen is on the climate front. Donald Trump doesn't really believe in climate change. He likes the fossil fuel more than green energy, and so that transition could happen in the US market, and we'll have to see how that impacts those policies. And that could actually come and have an impact on Indian green energy companies as well, right? So we actually have to see that. And finally, geopolitics, war situation. I think the war in Ukraine will have an impact because Donald Trump might not support the funding of the Ukraine war. Similarly, we could see an impact happen in Israel also if Donald Trump sort of escalates that situation, and that could lead to again escalation in the commodity prices. So a lot of things that will happen on the macro front, and the politics of the US or the geopolitical scenario will be something that we'll all have to watch very closely for the next few months. And I think come February, March, we'll have more clarity on what is happening. But these policies will, I think, seep in into the markets, and they will sort of escalate the volatility that goes on, right? And obviously, geopolitics is important because if you look at this amazing research from a report by Nuvama, what you would see is that FII's flows always sort of shape the market movement. So the direction of FII's flows defines the direction of our markets, and actually DII flows have always followed the market, right? So FII flows lead the market and DII flows follow the market. So even though we are seeing a lot of DII flows coming in, the markets are overarchingly sort of impacted by the FII flow. And post COVID, what you've seen is that India has gotten more flows compared to any other emerging market. So look at this chart, you'll see the flows in other emerging markets have slowed down, whereas India has attracted these flows. But recently, what you're seeing is that GDP growth differential between India and the rest of the emerging market is sort of slowing down. Even the earning differential is sort of narrowing, which means that Other EMs are posting stronger earnings, stronger growth compared to, or that differential is slowing down, so which might lead to maybe FIS flows diversifying away to other emerging markets also. And this is something that we have to worry about until unless our earnings come and surprise us, until unless our growth comes and recovers and we again see those strong numbers. So these were some of the geopolitical things that we have to worry about. Let's talk about what can be the domestic things that can be catalysts that can come and actually boost the markets, right? So we talked about a few worries, but what could be positives? So in terms of positives, we think capex trends, right? So if you look at this, we will see we've seen this chart before that government has reduced spending and deficits have actually reduced, but we might see more capex happen in the later part of the year. So that is one thing that we sort of have to. So that is something that we have to understand. Similarly, and we have to actually look forward to, we are looking forward to higher capex. But another big and interesting thing that is happening is that while the while the rural demand is lowering, while the urban demand is lowering and capex hasn't happened, your rural spending is showing up move, right? You're seeing rural wages increase. So this is a chart from Daulat Capital that I picked up. You will see that the rural wages are seeing a very significant uptick, which will lead to more spending in two wheelers, more spending in, for example, stocks in the, like, rural segment, in the let's say uh, in the farming related, in the chemical agrochemical space, you will see more upticks. Here, if you look at this data again from the same report, you will see that agricultural production has been very robust this year, right? 2024, you will see many of the crops, especially the larger crops, have done pretty well. So the Kharif season has worked really well. Also, monsoons were amazing this year. So the reservoir levels are at full capacity or over capacity, or are more than what people need. So that is a big positive for the rural segments as well. We've also seen in the recent elections a lot of welfare schemes go to the rural segment, which will be a positive for the rural economy as well. So we expect that to be something that is again a big positive that is happening in the economy. So maybe if people who are looking at long term buys might start looking at the rural segment, or the other side of the economy, as the place where you could pick some interesting stocks. Now, the second catalyst that will come is the corporate earnings. Corporate earnings, we were disappointed last quarter, right? Last quarter, you look at this chart. This talks about the number of downgrades versus number of upgrades, right? So that really flipped last quarter. You saw so many downgrades compared to upgrades. You saw the P ratio, forward-looking P, sort of decline because of these downward expectations, which can be a positive if the valuations are lowering, but are also a little bit of a sign of a worry until unless we see a strong recovery. So I think earning season, where you will see tech earnings start being announced pretty soon, and the next couple of months will be very interesting, and we'll see how that whole trend is changing. If there is a significant recovery from last quarter, that would be, I think, a big positive on the expectations. Uh, if you look at April to November data, which is calendar year data, you will see that Nifty has only done 5%, right? So while in the financial year it has done 15%, in the calendar year it has only done 5%. And the sectors which have worked really well are IT, consumer durables, pharma, financial services, and banks, right? So this is where we actually also have the stronger expectations, right? So we right now, if you look at sectoral trends, we expect the stronger earnings, in fact, to come from banks, consumer durables, some financial services, IT, pharma, etc. And what you will see is that post the last earning, the recent most downgrade that have happened is in the chemical, energy, cement, and discretionary space, and whereas IT, pharma, BFSI and all have not been that much impacted. This is something from Nuama research that I picked up, where they say that what could work in this economy is, number one, stocks that have reasonable valuation and low margins, which is where private banks and insurance comes in. Sectors that are defensive cash cows, so FMCG, pharma, and telecoms of the world. Finally, stocks where you have high valuation but depressed earnings. So, for example, chemicals, cements, QSRs could do well, but what will not work that well is stocks with high valuation cyclical headwinds, for example, metals, powers, and autos, and sectors where you have very high valuation, which is industrials, right? So this is the pyramid that they have built. And that is also pretty similar to what our sectoral outlook for 2025 is. So in terms of sectoral returns, this is CY20, this is FY, I mean, this is CY24, right? And what you would see is that your pharma and real estate have actually done really well, and your banks, FMCG, energy have underperformed. But in the later half of the year, like we saw, the defensives, IT, pharma, and FMCG were actually, and financial services and some banks were actually the better performance compared to your other sectors, right? So let's quickly go over what our expectation to different sectors are, and especially with the earning season coming. So I think consumption is a theme where a lot of people went to because they thought defensives will do well, and defensives means consumption. But consumption did not work that well for us. FMCG did not deliver for people's expectations. So in our positive, and what we're seeing positive here is the rural demand. There is a recovery happening on the rural side uh, due to favorable monsoons, a number of subsidies, and it might start outpacing urban demand, which is great because rural demand has been really low since COVID. On the FMCG front, people are not going to see a very good earning because urban demand is going down. And but still, on the discretionary side, especially in the premiumization side, you will see consumer durables, e-commerce, and all will drive growth. So the things where we see positive numbers are the alcohol segment. We expect very strong numbers coming out there, or stronger numbers coming out there. Durables, electronic manufacturing, all that, white goods. Similarly, e-commerce is where we see strong numbers coming in. On the other hand, discretionary, the large FMCG companies might not do that well. Hotels are expected to be moderate. QSRs might not do that well, right? So you could be selective in this segment also. Now, on the banking and financial side, people expect we expect stronger numbers from all the banks, and stronger numbers from private banks and insurance compared to PSU banks because they're clean balance sheets, right? So private banks have stronger balance sheets, and the profitability position for banks is strong. Whereas you are seeing insurance also increase penetration and profitability improvement, and is a very interesting defensive play. So we would prefer private banks over PSU banks in the coming quarters. IT again is very interesting. We've seen an uptick in IT. So look at these charts here, and you will see that IT valuations are inching up, but the demand, right, which is coming from global growth, in fact, has not seen anything significant, right? You're seeing uh, neither has the global PMI, neither the revenue growth been anything significant, but your valuations are again hitting a high. So we have to be cautious from the IT segment. People have started jumping over to IT, which obviously gains due to currency depreciation. But you have to be aware that the demand is not picking up. Obviously, the global tech giants, the US tech giants, are a different ball game altogether. They are the ones which are doing highly strong revenues plus highly strong profitability. They are a league of their own, but Indian IT is not there yet, and we have to watch out for the demand situation and how well do they adapt to the changing world of AI and automation, and make their sort of footprints there. In terms of healthcare, India has a leadership in generics, and but FD approval sort of define where the growth goes. And with Donald Trump coming in, you don't know how that will come and impact. But what we really like is the hospital segment, the diagnostic segment, the medical devices segment. You're seeing very strong numbers there, and a lot of stocks coming up from that space. Here, what you are seeing is, but on the overall pharma space, what we also really think is that many of the expectations are built into the prices, and in the last 3 to 4 months we've seen consolidation happen in this space as well, so we have to be careful here, or we have a sort of a defensive sort of a stance here. Finally, capex like segment, we've talked a lot about that. And we did see, like for example, if you look at the defense ETF in the last 6 months, this is, you will see that there was an uptick that happened, right? People started buying defense stock. People did start buying this because they expect capex to pick up, but then that has petered out a little bit. I think the deficits are still a worry for the government, and you don't know how soon the capex will start. But there are still many interesting companies stock here where you can build some positions, and even cement is a strong space where you can pick some positions as well. So that was my quick overview on the sectors. Now I'll talk about what should be the investing strategy for 2025. See, in 2025, what you want to do is be diversified. You can't be concentrated. You can't be taking significant risk in any sort of space. You have to be diversified. Secondly, you have to focus on quality. What that means is, quality means that the companies that are consistently profitable, that have good moats, that will have that will survive any hardship that might come. So quality is something that you have to focus on. Thirdly, you have to be stock specific. What it means is that look at, for example, the consumption space right now. Across the board, FMCG companies are not doing that well, but certain segments like alcohol, certain segments like, for example, some stocks in the underwear segment are doing well, right? So we have to identify those pockets where you are seeing strong growth, where you are seeing stronger themes being built, and you have to be stock specific and you have to be tactical. Themes could change. For example, the strong expectations from the FMCG last year changed, and people are tactically shifting out of it. Similarly, defense and railways and all this underperformed, but there's still expectation being built there. So you have to be tactical and being able to shift across the theme that you're following. Along with it, you have to have a focus on hedging right now. Silver, gold are great hedges for you to add to your portfolios. We have some gold in our factor strategy. You could be prepared with some cash sitting around for hedging your portfolio in times of high risk. So that is something that you have to focus on, and we do have a focus on that. Along with that, valuations, right? So you in this market, you can't jump into any stock that has very high valuations, right? So you have to be careful about valuations and quality also, along with, if you are picking momentum in certain spaces, right? So that is a quick overview of how you should be investing in the market. Now we will go over to the Q&A session, and we'll take up questions from our audience. I'll bring in Siddharth. Yes.
Yeah, hi Sonam. Sonam, we've got a few questions. As you can imagine, many of them are on top of.
Mhm.
I will try to take them up one by one. The first question is from one of the PMS investors, Aishwarya. They're asking, can you share your view on adding more to the PMS specifically, and any sort of thought on when that should be, looking at the recent corrections, how much they should add in terms of percentages, let's say, given the current market scenario?
Right. So I think we did come out and talk to our investors around Christmas that could be a good time to invest. And we still think that it's a slow recovery that might happen till January, right? The market is sort of seeing, especially in the early trends in February, in January. So that could still play out, and we are also, we bought a little bit even on Friday for our investors. We bought something in the later half of December also. So could be a good time to invest. And we, whenever you put in money into the PMS, Aishwarya, we don't invest everything on day one. What we do is we look at the market condition. When there is a correction going on, we'll buy more, and whenever there is some sort of strong trend, we buy less, right? So we think it's an interesting time to buy. There is no doubt that there's going to be volatility with Donald Trump coming in, and earnings being slightly at the bottom. But I expect the growth and stability to come in the later half of the quarter, or early next quarter, and this could be a great time to actually accumulate.
Sure. And just as a follow up, there's another question which is talking about hard landing and market correction. This is from Mr. Ankit. Do you expect the market again, because there's still significant volatility because of, let's say, Donald Trump and even budgets that are going to come up shortly? Do you expect the market to have a hard landing and maybe a potential crash in
I
the 6 months?
honestly, I do not have a lot of confidence in sort of the fiscal maths of Donald Trump. Donald Trump will not care about the ballooning debt in the US, and sort of stabilizing that. He would try to boost growth and do that America first policies, playing to his base, right? So you don't expect Donald Trump to be fiscally smart, right, at all. And if he's not that smart, then obviously again you will see inflation creep up. You will see, the rate, the Fed already is hawkish, and they might become more hawkish, which could impact the market. So again, there are, right now what we can do is speculate what happens. But from if you actually understand Donald Trump's stance, it could actually lead to slightly hard landing. If Biden's policies had continued, we could have seen a soft landing, and economy sailing through and maybe stabilizing. But Donald Trump could come and disrupt that, like you said.
Sure. Again, just sort of wrapping up on the top of questions before we move on to the other section. There's a question here from two parties. One is from Mr. Venkat Raman, and the other one is from Mr. Fahad Shaikh. They're asking about the budget specifically and the top up. So the question is, any expectations from the upcoming budget? And do we plan to convert some positions in cash before the budget to take advantage of any volatility during the time? And given the budget, is it a good time to invest now, post budget, etc.?
See again, so there are two types of expectation that are being built, right? Whenever I go on panels and all, you'll see one guy who's talking about capex starting up, and capex story, and that will revive, and somebody else is talking about tax SOPs giving. You've seen on Twitter people are talking about tax cuts that might come, and they might sort of try to help the middle class. Or there's another thing that they might not do anything, given that they want to be very, very fiscally prudent, right? So it's very difficult to speculate. What I really believe here is that the set of stocks that we have are strong. These are good stocks picked up across different industries that will continue to do well. And if there are changes, we are on top of it. We will rebalance and we will modify those stocks as and when the market conditions change. You have seen in the past, like I said, since September to now, it is all by the nature of stock selection that we have built a significant outperformance over the benchmarks, and we expect that to sort of continue. So stock selection is strong, and we will rebalance, like, in short. Yeah.
Sure. Moving on to sort of, again, I suppose, more macro level questions here. One is from Mr. Finance Guru. They're asking about there's a new outbreak of virus in China. Do we expect any sort of similar COVID type of scenario for markets, given that?
See, I am not an expert there, but I was reading that it is just a common cold that somebody is trying to make a new. Or I don't know. I've read it on Twitter, right? So yeah.
Another follow-up question, again, more a macro question, I suppose, is Squidby is asking, is consumption picking up, and do you expect RBI to cut interest rates soon in the current quarter, or will it go to the next quarter?
See, I think consumption, urban consumption, so that we're seeing some downtick there, but the rural consumption is picking up, and we saw auto numbers were very attractive, and that led to a very strong rally in the auto stocks last week, right?
Mhm.
And most of the numbers that were strong came from the two-wheeler or the small vehicles which were at a low. So I think the economy is sort of rebalancing itself, where urban consumption was leading and now rural consumption is picking up. So it's a good thing, and I think we could see potential stock picks happen in that segment. And if that trend is long term, so we should actually start building positions in the rural segment, right? I
Sure.
think on the RBI front, we do. I mean, I do expect the Feb to be the place where we could see some rate cuts. But this new governor that has come in, you don't know what happens. But I do expect that rate cuts should potentially happen in February.
Sure. And this is a question based on our fear and greed index that we had spoken about in one of the few earlier live streams. Mr. Vikas is asking about what that is sort of indicating to you in the current scenario, and what is the deployment strategy that you're currently following based on that.
Right. So the fear and greed index, it is fluctuating in the middle right now. So around December, we saw, just uh, before Christmas, we saw a big fear uptick, right? We saw declines in the market. The market gave up a lot of the gains that it has built in December, and we gave a call to our investors to buy. But then there's been fluctuation in that index in the later halves of December. Right now, I can maybe quickly share. Acha, my screen share is on, right? Uh,
Yes, yes.
yes. So if you look at my screen, you will see that the fear and greed index has seen. Greed has increased, but then it has petered out. We bought here, and we also bought somewhere here also. So we do expect. I think we do expect a small recovery, right?
Mhm. Sure. Again, same Mr. Vikas is asking about uh, in the last webinar we spoke about the defensives and the offensive along with segmentation and movement towards
I
value.
couldn't hear you, Siddharth.
Sorry, can you hear me now?
Yes.
Okay. So Mr. Vikas is also asking about he'd seen our last webinar where we'd spoken about the shift from offensive to defensive stocks, this sort of sector rotation that's happening, move towards value investing, etc. So his question is around that. He's asking what has changed since then, and how has the strategy changed based on that last webinar update.
Yes. So what we are seeing, if you were to look at factors right now, is that obviously in the recent times many factors have seen correction, right?
Mhm.
In terms of again, I'll just share my screen here. Uh, so if you look at it, what you would see is that most of the factors have seen corrections. Momentum possibly has done better, and value has done better in quality. But in the recent times, possibly momentum is doing better than the other factors, right? Earning momentum continues to be strong. You see valuation and quality again. So we do have focus on a mix of momentum, value, and quality. What we are also seeing here is macro indicators, right? So macro indicator means stocks linked to, let's say, North America sales, stocks linked to industrial production activity in India are also giving strong signals. So we do have a little bit focus going there as well.
Sure. This is a question. Is a more sort of again changing the sort of rhythm here. Mr. Sachin is asking what are the PMS fees and charges. If we just shed very high level insights here.
Yes. So on a very high level, see, the direct fees that you get from us is 1.5% flat fee on the invested value. That's the first option. But then you have two other options also, where one is where you have a 10% fee, 10% hurdle rate. What that means is that till we do 10% performance, you're not charge anything, and over about 10%, we share 15% of the profit. There's third option also where BSE 500 is hurdle. Till we made BSE 500, we don't charge you anything. Over and above BSE 500, we'll be charging you 15% of the profit share. So you can choose any of these three options. Most of our investors go with the fixed fee. So the second and the third option will cost you more if we are doing well, will cost you less if you're not doing that well. First option will always be constant. So many people go with the first option, and you could choose anything if you're coming through any intermediary, right? So depending on your financial partner who is bringing you that our PMS, they might have a different fee, which includes, the service cost that they are giving to you as well, right? So there might be different regular rates that you might be offered by different intermediaries also.
Sure. Mr. Sanjay is asking, what is the midterm strategy for alpha and factor PMS funds? Given that, again, the same sort of volatility top up related question, and his focus is more on whether there are more factors that we might be implementing in the strategy to enhance the result or the analysis that we're doing here.
Yeah, so that is an interesting question. See, we have talked a lot about our economic scenario. Now, talking about what factors are we picking or what new that we're looking at right now is see, we are looking at an expanded universe of stocks. We have, in fact, included a whole set of factors, right? Especially in the estimate space, in the valuation space, and we are sort of bolstering our existing factors to include those sort of factors also. We have added news sentiment as an indicator, so that's a very strong indicator of how the market is sort of looking at this particular stock. So we are including that in our set of factors also. In terms of risk and regime models, what we're doing right now is including a whole set of new macro data to boost our regime models also. That is something that we're working on. Finally, another interesting thing that I might talk to you guys about is that many of our investors in fact come and talk to us and say that okay, PMI is something new, but I do have a huge set of mutual fund that I invest into. Can you help me have a look at that, help me understand where I should be allocating between all these mutual funds that I hold? So we are doing that service for many of our clients. We've added a new guy in our team who is uh, who is essentially helping people rebalance their existing mutual fund portfolios and their existing stock portfolios, in case if you want to bring on your stocks to the PMS. If you want us to give you a comment on how you could rebalance your existing stock portfolio, how you could rebalance your existing mutual fund portfolio, what you can also do is bring on your stocks in mutual funds into our PMS and let us rebalance them and maybe bring in some of our strategies inside that. So we are doing that as well, and actually we've done that for quite a few clients recently. So people interested into that can also come and do that.
Sure. There's a question here from Mr. Vijay. They're asking, they've invested in the PMS and also have invested in our small cases.
Mhm.
Um, just a question from him is it better for him to exit the small case given that we could do active management on the PMS side, or should he keep both?
See,
Uh,
I think it is a preference that different people would have, right?
sure.
For example, there are certain clients who want to basically, who want to be able to take slightly active role in their investing, right? So wherever we publish a small case, many people, would do selective rebalancing. They will add their own stocks and do all that. So for them, that structure might be suitable. For others, who want to leave it all to an expert, especially in this scenario, so that's what we see is many people, given that they're seeing volatility, more and more people right now are actually coming and saying that, I want to give my money to an expert to manage, right? Instead of taking that whole ordeal on myself. So for that use case, I think PMS would definitely be a suitable option.
Sure. And just again talking about small case and PMS. Apart from the PMS, this is from Mr. Poon Chandar. He's asking what is the other products that Wright Research has, which could be on a smaller level, let's say 5, 10, 15, 20, in that sort of range number.
Right. So we do have the small case products, right? We have momentum small cases. We have certain thematic small cases that you can go and have a look at. It's all on our website. We have mutual fund baskets that you are seeing, where you can invest into a selection of mutual funds selected by experts from our models, in fact. And we have advisory service also, which we have started tiny, specifically for our current clients or to help our clients who are coming. So when somebody is investing a large amount of capital with us, right, they expect a greater service from us. They expect us to sometimes help them in their overall allocation. They seek financial advice from us, so we have that as a service going on for our existing clients right now as well.
Sure.
So yeah, and we are actually sort of thinking of launching we're actually working on a product where we will do advisory through a tool. So right now there's a tool on our website where you can come and get a review, but that's only a very sort of a top level review which just gives you basic information. Where what we're doing right now is building a much more in-depth review both on the mutual fund and the stock side. We'll start with the mutual fund side where we'll give you actionables, right? These are the suggestions that we give you, and you can come and talk to an expert from my team, or act on that suggestion as you see.
Sure. While we're talking about the small cases, there's a few questions on Alpha Prime. This from Mr. Neeraj, Mayank, and I believe Mr. Gaurav. They've asked at a very high level, the question is around performance of Alpha Prime. What do you expect it to do? How has it done in the last 1 year? And also on the rebalancing side, I think there's a little bit of a misunderstanding of how rebalances are working. Can rebalances be done in the middle of the market? So during the middle of the day is the other part of that question.
See, I think talking about Alpha Prime, I think the strategy's performance has been pretty good in the last 1 year. It has built outperformance over the small cap strategy, over the large cap funds, and the performance has been pretty good, right? We've done close to 38-40% over the last 1 year. Not that bad. And in terms of expectation, our expectations are strong, right? We expect it to beat the market by a good margin. In the longer term, we expect the returns to be pretty strong. Talking about rebalances will come on Mondays, not every Monday, but on certain Mondays. And if there is a significant thing, we will rebalance in the middle of the week also. When can you apply the rebalance? You can theoretically apply it any time during the day. Small case publishes the average value of open, high, low, close as the rebalance price. It does not assume that you bought it at the open or at the close. It assumes the average value. So you can actually rebalance any time of the month, right? Any
Sure.
of the day.
Yeah. This is a question from Mr. Gautam. He's asking, he's one of the PMS investors, and he's wondering if we will be launching the new SIF that SEBI has launched, the sort of 10 lakh, 15 lakh sort of product. Is that something that we can also be entering? So,
See, that product is only allowed to AMCs right now, which is people with the AMC license. We don't have that license right now, but maybe in the future we'll be able to get that license, or maybe in the future SEBI will allow us to do all of this even as PMS houses, or maybe we'll get some other licenses that will help us get more specialized strategies. So, but we do have plans to do everything in the, I would say, alternative public equity sort of side, be it on the stock side, be it on the derivative sides. All sorts of interesting product is where our team sort of flourishes, and that is where we will be, and we will sort of navigate the regulatory environment to bring on all sorts of products to our clients.
sure. This is a question from Mr. Sanjay Bishwas and also Mr. Rajneesh. Again, are we planning to launch an AIF soon? Any thoughts, any news on that?
Yes, I am planning. I am talking to people. We are sort of we have strategies in place that are doing really well. So we should be going out soon with an AIF, but the AIF setting up is a process, and I also have to work a little bit on the partnership side for sponsors and all. So we are in the works. That all is in the works, and we might come out with it with pretty soon, right? I'm not saying that next month, because setup itself takes 2 to 3 months, but we are planning about it.
Sure. This is a question from again from Mr. Vikas and from Sanjay Biswas. They're asking about tools that are available either on the PMS portfolio, PMS product page, or on the website. Any update on revamping the dashboards, or how they can track the PMS portfolios better? Any sort of implementation timelines, etc.
Yes. See, I think yes, we are working on that front. There are a few interesting things that we have done on the website also. So I'll maybe quickly take you guys through that now that we're all on this call, right? So you will see that you can see a review tool. So right now what we're doing is working on revamping this to actually give you actionable insights on what you can do with your investments, your existing investments, or you can actually, right now, if you want that view, come to my team and we'll help you. We've also done, what we've done is we've added quite a few interesting, and this is where Siddharth has done so much work is a whole drill down into a lot of interesting sectors, whole in-depth reports. We have on our blog page, you will find very interesting sort of dashboards. Where are those dashboards? That they're on tools side, right?
On tools, yeah, on tools,
Yeah, yeah. So
inside the
here
tool.
you will see that you will see all sorts of these new dashboards have come in. I don't know why these charts are not coming. Yeah, see these charts where you can go and see. Let's say you're trying to find value stocks. What are the top value stocks in the mid cap, large cap, small cap segment, and a lot of interesting data is put out here. So, and yeah, on the PMS side, we have done this branding change a little bit, where the black and gold is gone, and we have the premium website in our own colors, and we are looking to build that dashboard as well. So a lot of work happening on the tech side and the product side by our team.
Sure. There's a few questions on banking I'm just seeing right now. I'll just quickly ask you those. And these are related to some of them being in the existing small cases or in the PMS portfolios. So one is from Mr. Mahinder. He's asking about just at a very high level. Rate cuts are expected. So does that mean bank NBFCs also start becoming, favorable in that sense? And overall, what is the sort of view on, let's say, banking, large cap banking stocks? This is a question from Mr. Rakesh.
Definitely. See, NBFCs, I think at least till this quarter, they will post mixed sort of number. There's certain NBFCs that are doing well, but what you're seeing is a stress happening in the small MFI space, right? There is a lot of stress that is there. But yeah, I think if the rate cuts come, that will boost the segment. You look at stocks like Bajaj Finance and all; they've not done well at all while the rates have been high. But I think once the rate cuts happen, they should do well. But I think the strands also matter. If the RBI stays hawkish and cuts the rates, that will and not have that much of an impact. So that is something that we are watching. Uh, so that is view on the NBFC space. On the banks, I think the large banks we would see private banks. I think is where you could actually put some focus on. You're seeing strong movements happen in RBL Bank. You're seeing strong movements happen in so the other IDFC, Federal, and all those banks. And I think the larger banks also will see good sort of numbers. And I think typically in a scenario where growth slowdown is happening, you see large banks do well. And in the banking space, along with banking space, I would say insurance as a space could also be a great pick for investors looking to go there, right?
Sure. I think I'll just take another two, three questions from the list that I already have. Just continuing on the banking space, this is a question from Mr. Varun. I believe is one of our HNI quant investors. He's mentioning that today we've spoken a lot of there's a lot of bullishness from our side on banks.
Mhm.
Is it that we'll be adding them to the quant HNI portfolio? Is it that it's already there in the PMS portfolio? Is there some sort of a delay between the two portfolios? They're just wondering what.
No, I think there is no banks in any of our portfolios right now. We do have a lot of financial stocks, right? So you would see capital market and linked stocks being there, fintech being there. Banks are not there in, I think there's a very small amount of banks. There's actually, uh, but yeah, I think that could come, right? So our models are not picking up, right? But in terms of earning expectations, that's where we're seeing but see the challenge is that banks have actually had that expectation or this that strong earnings in all these quarters, right? There's no
Yeah.
quarter where banks have underperformed, but the price movement has not come very significantly there. Um but yeah, I think in any sort of volatility that could happen, the banks would definitely, especially the private banks, would stay strong, and you could see them come up in our portfolios also. But our models are not showing them as yet.
Sure. This is a question. This is a slightly different question. It's on courses and learning, quant, etc. It's from Mr. Vishu. He's asking. He's gone through the Learn app. He's gone through the momentum investing, factor investing courses that we've put out. Are there any other courses that he can look at? Are there any plans for let's say an alpha strategy course or something of the sort that he can learn at?
So what see you will see a lot of content on our website that we are working on. We are also working on exclusive content on beginner quant, right? So a lot of investors who come and talk to us are sort of trying to learn quant and get an overview of that space. So our team is working on a lot of content on the beginner quant space. How you can get a grasp on, let's say, momentum investing as a beginner, other sort of investing strategy as a beginner. How can you start building that? So that is something that we are working on. um, we have, for people looking to become advanced experts in quantitative space, we have some amazing courses on our website. So we did a video couple of weeks back with Mr. Nick Firozier, who teaches in WBS for the algo trading course, right? So if you
Yep.
actually want to take algo trading as a serious career, that would be excellent. I will honestly tell you, an excellent place for you to start with. If I had access to that course, I would have been doing maybe much better right now as an algo trader. So I think, or sooner, right? So that is something that you actually could go and have a look at, right? But yeah, we will keep
Sure.
on developing content. Maybe we could, you guys can write down in the comments right now what type of content you want us to create. Every week we plan out what videos and what content to create, and we go with specific things that we might think might be interesting, but we would love to get feedback from you on what you want us to talk about.
Sure. I'll maybe take one or two more. There's so many questions that keep coming. This is from Mr. Yashashri. He's just trying to understand the returns that we've been showing on the website or on the presentation. Are they net of taxes, fees, etc.? What are those returns?
See, they are net of all the expenses, right? So fees, our fees, custodian fees, broking, STT, all that, GST, everything is included there. But the tax that you pay is on an individual level, right? So the capital gain tax is not included there, but everything else is included. You still would have to pay a capital gain tax. Now, on capital gain tax, I'll just add before anybody can question us that. People expect that PMS strategy, active strategy, will have a lot of tax on the short term side, right? But we did an analysis for some of our clients, and we saw that 70% is still short term and 30% is long term. Even right now we have 6 stocks in the factor strategies that will be 1 year or more by March, and we would actually be doing tax loss harvesting also, so it's not a major tax liability that goes out, right?
Sure, sure. And I think this is just the last question, which kind of summarizes a few of the questions I'm seeing. One is from Mr. Vishal, one is from Mr. Sanyam. They're trying to understand one, if they want to move funds from small case to PMS, how do they do that? In that sort of comment that you made earlier. And the second is if they want to start this sort of mutual fund advisory of their existing portfolios, or sort of an advice on their existing personal portfolio, how do they do that?
Yes, so see, the best way to do it is, let me share and show you this. You can come to our website, rightdecision.in/, portfolio management service, or go to rightdecision.in, and here you will find PMS as a tab, right? Here, just put in your information, click on get started. I mean, see, I am logged in, so if you're not logged in, or
We
if
can't
you're
see
a
your
new,
screen. Sorry, if you're
okay,
sharing your screen.
okay, you can't see it. I'm so sorry. Yes, so here, see, this is our website for the PMS, right? You can come here and just click on get started, put in your information here, right? And just click submit. We will get your information, somebody will call you, otherwise you will be prompted a window which gives you a calendly link, so that we can put that out in the comment also.
I'll put that out. Yeah, I'll just put that out.
There is a calendar link through which you can book a call with people from my sales team, right? So they will help you in navigating. If you want to shift to PMS, you can do that. On the other hand, if you want to, for example, get some advisory on your existing portfolio, they will channel you to the advisor, right, who will help you. So you can just use that link. They are very smart people who are sitting out there. They're very happy to help you. Once you get on a call with my sales team, if you want to come and connect with me on a personal basis, you can just make a request to them, and we'll organize all of that.
Sure. And for existing investors, because so Mr. Sayam is also an existing investor of PMS. So he's
And
just
to you
wondering
guys,
how.
you have access to our WhatsApp number, you have access to our, you just drop us a line, or call Shivam or Pratishta, whoever number you have, right?
Yep.
And we'll set it up, anything that you might need.
Perfect. I think that's it. I think we've covered majority of them. There's still a few, but I think with paucity of time, I think we can wrap up at this stage.
Perfect. So it was a great session. It's a very interesting market also. So I had a lot of fun sort of devising this presentation. I hope it was helpful, and I hope our investors are enjoying our PMS. I hope people who are watching like our products, And thanks a lot for everybody for coming on a Sunday. And
Thank you so much.
yeah, and very excited to navigate the interesting market that's going to come up in the next few quarters. Thank you, everyone. Have a
Thank
great
you.
day.